Welcome to the Atomic Level, the show where we decode the matters of wealth, one insightful conversation at a time with the rising stars in finance, business, and tech so that you can grow and protect your net worth, and most importantly, your net happiness. I'm Chris Snook, and today, not only is he a rising star, number 4 and climbing, but he is doing it in a way that nobody on Substack is doing it, with a conversion rate that is destroying people with 37 times his free subscriber base. I am super excited. He is an avatar and a human, but you are going to hear the voice and not see anything but the avatar on the screen. So that is not a technical error today. If you're watching this live on Substack, it is just the way it's going to be. James Bulltard, the man, the myth, the legend, who is number 4 on finance across all Substack. Welcome to the show, James.
What's going on, Chris?
All right. So we've done all the things. Like MarketStack, who's a third-party independent kind of researcher, shared some data this week. I shared it with you. You were kind of, interested because you didn't even know. But you are actually one of the best sellers across all of finance on Substack. And we're going to go through the next 90 minutes here. People are going to understand rapidly why that's the case because of the value that you're delivering, the alpha that you've generated and that's documented since you've been writing here since 2022. We're going to get into all of that. For those who already know him, welcome to the show. You're going to see sides of him, I think, that you haven't seen despite being in the Discord and doing all that for the last several years or months that you've been subscribing to him. For those who do not know you, welcome to the conversation where I'm going to get to know him and you get to be my ride along. So let's just start quickly with kind of the man behind the mythical avatar that's a private individual who publicly shares some really insightful stuff. Where did you shape your worldview on how you think about markets, about business, about money, all that things? What were some of the early things that shaped that?
With markets, it really began at a young age. Back in the 90s, I don't know if you remember those Yahoo message boards. That's where, that was before Twitter. That's where we used to be back in the 90s. And, I was a kid back then and I'd go in there and, stocks were something I always had an interest in, but I didn't really understand the game. We were coming up and you would buy things and you'd get your teeth kicked in. And I never really understood how the technical aspect of it worked. And after a while of, losing constantly when I was a kid, I had somebody reach out to me and explain to me what technicals were. And it just clicked. It just all clicked for me ever since then. And, now we're talking.
You read, was it Lynch or what was the first book that you read on that?
I don't remember what book I read, but technicals, the thing about me is my subscribers will tell you I don't waste time. I'm very blunt with a chart either looks good or it doesn't. And that just simply shows buying or selling in a name. And once I was taught what that was 30 years ago when I was a kid, it just all clicked all at once. And the markets come easy to me ever since then.
Interesting. So when you realized that your brain and your wiring kind of could do the thing that most of us can't do, and I'm not saying you don't get emotional, but there's that saying, right? Don't get emotional about stocks. And that really plays into the technicals because the fundamentals sometimes can have us be very convicted and they have their own value, but there's two types of people typically, right? There's people who lean more towards the fundamentals of a business and want to buy and hold for the long haul on a great business. And then there's people who realize great businesses don't always equal great investments and timing matters. And the technicals are really the sentiment of the price value action. And they're two totally different mindsets. And it's very hard to be one if you're built the other way. Do you agree with that? Or do you think that you can learn to be both?
What I would say is over time, every good stock goes up, right? It doesn't take a rocket scientist to tell you to buy Amazon or buy Google, and in time, you're going to make money. What is hard is understanding when it's going to be strong, when it's going to be weak. And once you learn that, it's all there in the charts, right? And I think I do it as well as anybody. 4 days ago, we had a breakdown in the market and I highlighted it perfectly, and we've had continued weakness since. And once you understand that, your ability to trade on shorter time frames improves dramatically.
So, you serve a bunch of folks that either professionally or part time, sometime, whatever, trade actively in their accounts, personal accounts or otherwise. Are a lot of those folks day traders? Are they more long term, but they're just more technical traders? Do you define those two things differently? In other words, are you a technical trader who
I
who
I I would not even say I'm a day trader. I very rarely make moves. I'm very calculated with my moves. And what made me who I am on Substack is the fact that I was probably the first person to actually share my book. Okay, that was one of the things nobody did back in 2021. COVID was going on. I was sitting there on Twitter like everyone else. You're watching all these gurus posting Excel spreadsheets of positions they have. They're magically in and out of names at the right time. And these guys were horrible. I mean, they were horrible. You had some of these guys that were, Chamath hired two guys off FinTwit to run a social capital fund, and he fired them within a couple months. They were awful. They were just genuinely awful. And I think the reality is most people don't understand how the market works. They have good intentions, right? They they see growth stories like everyone else, but they don't really understand when it's time to buy and when it's time to sell. And those are two completely different things.
great. So let's go there because it's a good segue right into kind of your operating system, how you think.
Right.
How does the market work according to James Bulltard?
In my book, the 21 EMA is the most important moving average in the entire market. That is your 1 month moving average. Okay. And when you're above that on any index, any whatever, it is time to press things. You don't have anything to fear. And anytime you're below that, that is when you start to have to worry about what is next. Now, 90% of the time we break under the 21 EMA, nothing happens. And in a day or two, the market is saved, right? But every single major sell off in history has begun with a move under the 21 EMA. And that's why I'm in the camp that if you have any short term positions and the market moves under that, it's on you. If you don't lighten up, if you don't go to cash, whatever comes next, that's on you. And so you look at 4 days ago, Friday was our first break under the 21 EMA in 2 months. And look at the follow through we've had, right?
A lot of the audience of Wealth Matters runs the gamut from super smart money to family offices to advisors, and most people are um, in the market with a sizable sum of investable assets, but they may or may not be technical. They may not consider themselves Wall Streeters. Most of them actually would not, but they're very interested because now they have something to gain and lose, right?
Sure.
Can you just comment down as we go forward with some of the acronyms for moving averages? Like what is EMA for those who've never heard of that before? You
EMA
know,
is an exponential moving average. Okay.
okay.
And the way you have to think about it is the majority of the market is computers trading back and forth. Those computers are not reading balance sheets. Those computers are not looking at the PE ratio of a stock. They are simply buying and selling levels. And if you're going to focus on short time frames, you have to think like those computers. And if you don't, you're just wasting your time, right? Because equities move on nothing on a day-to-day basis. They literally they float around. Look at something like Amazon. It's gone down, I don't know what, 15% in a couple sessions. Equities move on nothing, but moving averages break. You're going to have extended weakness in an equity, and it is what it is, right? And so there's no point fighting it.
So when you're talking about the exponential moving average, different than the 50-day or the 200-day, a lot of the
Sure.
technical triggers that other people look at, um, is it just because of the hold time? And what is your hold time when you think about markets? Are you a set a position and look at that and be only worried about it when it's not going
So my
above the EMA? Is it just that simple? Like you said, you're going to add to it with both fists if you see it above the 21 EMA, or you're going to start to take profits and maybe move out of it if it breaks it, or what is your horizon of time for your framework?
Okay. So I try to keep things simple myself. So I have five moving averages on my chart. I have the 8 EMA, I have the 21 EMA. Those are your short term barometers. Okay. And then for longer term, I have the 50-day, the 100-day and the 200-day. Now, every stock is a buy somewhere on the chart, right? That's where people get lost in the market a lot of times. They think any stock is a buy at any level. That just isn't the case. It all goes together. Okay. My database is full of option flows. That's where you're looking at where are the big institutions putting on their trades, where do they want to buy. You combine that with moving averages, and now you have a better chance at succeeding. Do you get what I'm saying? You're giving yourself a higher probability of success.
So a lot of the things that you mentioned, and I don't want to, I don't want to disparage or throw anybody under the bus, but there are a lot of things on YouTube, some of which are good. There are a lot of things on TradingView for those who are familiar with that, which is obviously probably a lot of your audience has either been over there or still over there. Or there's indicators, there's red arrow, green arrow, right? And a lot of these things, personally, again, I'm not a trader in that way. I'm much more of a value kind of investor, builder, long positions. I like to find entry points. That's why I want to learn from you, because that's something that I don't have a good framework for. So I'm going to borrow someone like yours, right? So regardless of kind of what your total end game is, understanding when to enter, when to exit something, when something's a buy, when it's not, is valuable no matter what your modus operandi is, right? But what are your thoughts on what's out there and how do you differentiate? Because your community is very active. You're with them every day. I mean, they're literally with you every day in Discord, right?
Sure. And like I said, they love me because of my honesty, right? I am one of the few people out there where if I tell you I sold 500 puts on a name, you can look at the volume that day and see my volume in there, right? A lot of these gurus out there will tell you, they'll show you a screenshot of how they made $1 million. They won't tell you when they entered, and you won't be able to see it anywhere. I am very honest about my entries and exits, and that's what made me so popular with such a small audience. As far as the moving averages, what makes them so important is, again, this is where the computers are programmed to buy and sell. Okay, you look at these algorithms that are out there; they don't just trade on nothing. They trade these levels, and that's why you see stuff like the market on Friday when we lost to 21. It's been a cascade since. And if you notice, every single day we pop back above it and we sell off underneath it. That's because we are now in a downtrend. And so that is just the reality of the market. And some people embrace it and they do really well. And other people, want to believe in fundamentals and that magic is going to happen and their stock's going to go back up. And that's fine because stocks do always go up, right? You pull up a 100-year chart, stocks are up and to the right since the beginning of time. So you don't have to be an expert to buy and hold a stock in my book.
Well, and again, I think everybody who's been in any kind of analysis of the markets realizes that's all a lie, because most people's investable time period is maybe 20 years, maybe 25 years. And so if you look at that 100-year chart, it's not just 11%.
Right.
Because most people's timing of when they start and when they leave, usually there was some kind of major correction in that blip. And if they didn't have the hedge, and if they didn't have some of your kind of analysis or your ability to kind of see that and enter right or put it and short it when it was time, they could have gotten wiped out 40%. And then by the time they need their money, there's no time left and they can't recover. Right. So the reality versus the graph are usually not the same thing. But let's talk about, so the Discord channel serves as almost like I'm literally a fly on your wall, looking at your screen, chatting with you. Just talk to me about kind of what the relationship has been like for the last 4 years with your subscriber base and your audience. Cause I'm just curious, like how much that's kind of a blessing and a curse, I would feel like.
It's like its own world in there. There's 2,500 people in there. The city I grew up in didn't have 2,500 people. So it's its own little community, but it's people from all walks of life. I mean, you have some people trading a $50,000 book, and you have some people sending me screenshots making $2 million in a session. I mean, it's the entire gamut of people out there, and all they want is an edge to their trading. That's it. I don't do anything special. Okay, option services everywhere. What I do is I filter it to what I think are the most relevant trades. And then my database helps you build better trades off of it. And so that's all it is. I haven't reinvented a wheel. I haven't done anything. I just am honest and I give people the most relevant data. No need to waste their time.
Where do you get your data sources from? How did you build your database that you openly share or that you modify? Like, where does it come from? Is it sector agnostic? I'm assuming it's all the above, but I'm not
No,
familiar with it enough to know. So,
look, all options data in the world, whether it's unusual whales, whether it's black box, whatever, all options data comes from the CBOE. That's the only source for data. There's APIs, but it's how you filter it. Uh, There's countless trades in a session, right? I personally log maybe 150, 160 trades a day that I find relevant. I have my parameters. And from there, you're looking at 150 of the single most relevant trades in a session. So if you can't find something to trade out of that, then you probably need to find a new hobby, is what I tell people.
and when you say you log 150, those are things you might do, or those are trades you make every day. Those are
No, those are trades that are being manually logged. There is no automated anything. I am looking through the tape. I have one helper and I have my parameters. And as I see trades that are of interest, I manually log them into the database. And then the database builds better trades off of it.
gotcha. And so, are you using some level of um, AI frontier models off of that database to provide you recommendations, and then you analyze it?
Absolutely. Absolutely. We use Claude. We use Opus 4.8.
Mhm.
And I tweak it every day still. I have my markdown file.
Have you tried Fable 5 yet? Is it just
I have not tried Fable 5.
dude,
I don't know how much it can improve on what I have right now
I
because
don't know either. All I know is totally separate conversation, but we have a an AI dev services business in the portfolio, and all I know is it's the single biggest improvement since 4.1.
Opus
Four
4.8 is phenomenal. It is
4.8
for what I'm doing, it's phenomenal.
Yeah, 4.8 to 5 on all the other benchmarks is the biggest improvement we've seen in the last 7 iterations. So I'd be interested to see if it delivered anything of even more value on your side. But yeah, 4.8 is crazy. It's only a couple weeks old. So the fact that we're already talking about the next iteration just is the insanity of this world. So you do the human thing. You take your framework, you apply it just to pack it up. You do 150 logs manually. Those are personally reviewed, personally chosen. Then you put that into the frontier model and you say, model this out. Give me other trades, other ideas, look like this, essentially, for lack of a better word, right?
Exactly, with my parameters. So I like to think of myself as more of a set of rules. Okay. I have a set of rules on how to view options data. So for instance, okay, someone in my community ran a complete scan of all the data I logged over the previous 3 years. And there was something, I think 14,000 put sales that I logged. Okay. Now, put sales are when somebody's trying to scale into a position, and 80% of those expired worthless, which means a complete win. Okay.
Right.
And so, for instance, in my database now, when I log a put sale, it builds a lower put sale. So if we know that 80% of put sales expire worthless, going, say, 5% below the large put sale that was just logged, that just increases your probability that much more. You get what I'm saying?
I'm following it, but I'm letting it sink
But
in.
okay, so what I'm saying is of the 14,000 put sales that were logged from 22, 23, 24, 25, when he ran this analysis, 80% expired worthless, which is a perfect win. If you sell puts, you want them to expire worthless. That is
That
a
seems a
full win.
little high. That seems a little high, or is that about average for puts? Because I know like call options are like 70%. 71 means you probably
So here's
price.
the thing. These are the puts that I'm flagging. These are the puts that I'm flagging as unusual activity.
Oh,
Okay.
okay, gotcha.
Okay.
This is not the average across all puts. This is
No,
just the ones you flag.
these are the ones that I flag.
So
And
then
so
the
if
misprice
80% of those expired worthless, building a better put sale off of those, your probability is going to increase that much more.
Right. No, that makes a lot of sense. Okay, that was the nuance. So, man, I don't want to jump too far ahead because I like my brain's already going to a different place. Because of how it works.
Right.
What are you building? Let me ask you a question that leads you a little bit, but doesn't give away where I'm brain is going because I don't want to get too far off this topic because it's fascinating. But what are you building here? Why are you doing this?
I'm doing this because, look, I think retail investors have a lot of bad information. Okay. 4 years ago, when this started June 8th, 2022. I wanted to kind of level the playing field in the market, right? I knew I had a lot to offer in terms of insights. And I felt like retail investors were just getting such a bad deal from most of these gurus on Twitter. And so I began sharing my musings. A year later, I built out the database and it's evolved ever since. And right now, what I would say I'm building is the ability to scale my parameters on stocks to every name that I log. And that's what we have in the database now, thanks to AI. I used to highlight 5 trades a day, right? I used to pick 5 trades a day that I thought were the most interesting, and I still do that every day. But now my same parameters and rules can be applied to every name in the database. And that's what AI is doing for me that helps a lot with just getting more information out there. Because again, every name is a buy. It's just where and how.
Do you think that every name is a sell then?
No, look, I'm never bearish unless a name is junk. Okay, I don't even short stocks because to me it's
Hmm.
just a waste of time. Okay, you know, the last time I shorted a stock was 2018 when Elon made up that fake buyout, right? And if that kind of stuff is allowed, shorting stocks is a waste of time. If we're honest, okay, there's almost a fake pump every other day. I mean, even now we're in this little downtrend for 4 days. We all know that Donald Trump will come out of nowhere with some pump and he's going to try to bring the market back to all-time highs in a couple weeks. It's just the way it always goes. So
This is actually this is not what I expected you to say. So I want to get clear on something because I haven't thought of this until you just said that. You do data-driven put option trades.
sure.
Put option is essentially a short, but it's an option against a short. Am I because a call option is going long, a put option is you're short, but you're not actually trading the short trade. You're just trading the mispricing of the option on the short trade. Is that
No, what I'm trading is, look, when an institution wants to enter a position, okay, an institution wants to come out and they want to buy 1 million shares of whatever Chipotle, right?
Yep.
You're going to see them go sell 10,000, 20,000, 30,000 puts at a level, okay?
right?
And what you're seeing when I log these trades is the end result of hours of delegation between portfolio managers, their analysts, their entire team comes together at meetings and they decide, where do we want to buy a stock? Okay. And that sale that you see, that put sale at say like 27 on Chipotle, right? There was a big one a week ago, like I think 45,000 puts or something, right? That was somebody looking to establish a position of 4.5 million shares. And so if we know that and we're at home, okay, and this fund is willing to buy 4.5 million shares of Chipotle at whatever, 25, who are you to question why it wouldn't be better to sell puts at 23, $2 below them, right? This fund has clearly a deeper knowledge of the business, and that's why they want to be in it at that level, right? And I want to build better trades off that knowledge.
Got it. That made sense. So then unpack it again, resay it a different way so that people understand. Is it the $2 spread that you're trapping?
No,
Where's the alpha come from?
I am trying to build a better trade than what the institutions are taking. Okay. We're seeing all these big trades institutions are taking, and we can always build a better trade. It doesn't matter what it is. One of the things about me, and for people who don't trade options, they wouldn't understand. I can literally build any trade into a trade where you get paid to put it on. You can turn any trade into a ratio. You can, add, call sales. You can do countless things. And that is what I try to explain and what my database tries to build is it tries to build better trades than what the institutions are taking.
Okay, so let me ask. It's going to sound maybe devil's advocate, but it's not. It's just the natural question.
Sure.
In the world of you being able to do these manual logs now at a different scale than before, because you can sort faster, better. You can apply your rule set in a broader way without more time because of AI. You can do the manual work that is unique to you. Then you can do lookalike modeling and scale the potential number of opportunities because of AI. So you're kind of wedging yourself between the input output that AI is giving you. It's like steroids for you, right? And then you're sharing that with your subscriber base and they're happy to have it because holy hell, right? I can learn while I'm earning, right? So there's that. Then there's the world of, okay, so you're doing that and you're one guy with an admin and a Substack and you're doing really well with it. But there's no moat for you except for the trust, which is the only moat that matters, by the way. You have tremendous trust. You've earned that over 4 years. You have that moat, and that moat scaling with a conversion rate on Substack that is dwarfing everybody else, from Doomberg to Burry to Citrini. So you're crushing conversion, and that trust is building, which gives you a real moat. However, institutions are looking at this and they're going, this guy's doing something interesting. So where does the arbitrage get squeezed down, or does it not? And if so, why not?
It won't. It won't ever change. And as far as my moat, I would say my moat is me, right? Because in 2022, when I started, I began trading a book that was 1.4 million. At the end of last year, it was over 11 million, and I pulled out 3 million to pay some taxes. And by the end of this year, I'll probably be back at, I don't know, another 12, 13 million again. I'll probably make another 60, 70% this year because my biggest trade is already deeply in the money and it just needs to decay into the end of the year. But um, it won't ever arbitrage because there's so many opportunities in the market. Okay. I'm literally just logging all the data. Okay. And again, what we're looking for in data is you're looking sometimes for inside information. Okay. 2 weeks ago, 3 weeks ago, I flagged this huge trade on UMAC, which is a company called Unusual Machines. And I joked that day in the recap. I said, hey, look, Donald Trump Jr. has 330,000 shares of this company. Who knows? We're probably going to get some news on it. And sure enough, 2 days later, it was up 50% because Donald Trump Sr. Uh, released some bill or something to fund drone companies. And so I'm not saying every trade is insider information, but there's a lot of times, like yesterday. Yesterday, all of a sudden in the morning, I flagged 5 huge put buys on Intel, which has probably been the hottest name in the database all year. Okay. And all the people in the room were saying, "What? Something's going on." And sure enough, by midday, Intel was down 10% because the whole market had crumbled, right? And so you're looking for live data from institutions, okay? All these guys look at 13Fs. Those are irrelevant. 13Fs are from months ago, okay? What happens in the options market is live look at what institutions are doing.
So what's so interesting to me, and I'm glad you started answering the question on why you do it. Um, your portfolio returns are tremendous, obviously. And you're documenting them and you're sharing them. So, like there's there's just that, right? Like if that ever changes, then someone's gonna be able to know, or they're gonna call you out on it. So, it's a very, very transparent way to be. You're monetizing, sharing that personal value in real time with the world to anyone who wants to learn and follow the trade, follow you, not just go to a workshop or do stuff. And so the Substack is growing at a tremendous rate. You've got 2,500 people in the Discord. They get that because they become a paid subscriber to the Substack. Is that right? I know you give a
Sure.
7 day free trial, but how do the mechanics of the Discord work? Because that's where all your community basically lives. Like you're doing this on Substack, but where your community is inside your Discord.
Sure. I mean, people who pay one time, they're just in the Discord forever. It's a better community. I mean, it's a community of finance people, right? I would say 40, 50% of them are finance professionals. And look, they're just looking for a tiny edge, right? For what I'm charging, $99 a month. If you cannot generate that, and I tell this to people literally all the time because they ask me, well, it's expensive. Is it worth it? I'm like, look, with all this information I'm putting out there, if you cannot get more than you pay me, you literally need to find a new hobby because you're just not good at this game. You're not good at
You
this.
need to do something else. Yeah. So, and that's okay, right? Because not everybody wants to do this, but
Right.
like that's the ultimate thing. Like if you can't make money with me doing this, then you should do something else because this is not for you. All right.
Correct.
So, but let me ask you this question. So the Substack though, your frictionless flow is amazing. Anyone who's writing on Substack, including me, I literally re-engineered some of my about page, some of that thing because I looked at yours. I'm like, oh man, I'm doing this so stupid. Right. So like I encourage everybody to check out jamesbulltard.com. If they go to app.jamesbulltard.com, they can see your
No, the app, I send out a link every single day that expires. So the thing is, the app and Substack, they're not integrated, and so there's got to be an expiring link daily, and that's the only way where people unsubscribe. Then your app doesn't work anymore.
I see. Gotcha. So you send out a new link every day
Correct.
to your subscribers on Substack.
That's right.
And then the subscribers on Substack get that through the DM or where do they get that on
Yeah,
Substack?
just every day I send out a recap, and in that recap, I'll have like a market analysis. I'll highlight 5 names, and then I'll have a link to the database. And my open book, I'll have, these are the positions I'm in at the moment. If I add a new trade, it'll be there and you can see it in the volume.
And so earlier when you sent me that just in prep for this, you said, hey, here's, check this out so you can kind of get familiar with my workflow. When I went to it, there was a thing that said, if you're already subscribed, right, you'll get it here. If you
Right.
haven't subscribed, click here. And when I clicked on it, it took me to essentially your Substack where I had to put in my email and subscribe. Like it was just immediately converted me there as a free subscriber.
Right.
Obviously, then I could choose if I wanted to be free or if I wanted to pay or whatever. But like it was the question then is where is the Discord? Is that
So
on that daily
the
app?
minute you pay, you get a welcome email from Substack, right? And in that, there's a link to the community Discord. It's very simple.
Gotcha. Right. Okay. And then you do not, unless you do, you don't sign up people direct on the Discord. Your funnel goes directly through Substack. That's your typical,
Correct.
correct?
Correct.
Okay. That's what I thought because I didn't think there was a way to go to the Discord and sign up.
No.
Gotcha. And so Substack, and then you're putting out a bunch of reports, some are free, the rest are all paid. Um, when you are talking about 2,500 people that are in your Discord, that means that they have all basically subscribed to you on Substack
Correct. Yes.
because they wouldn't be in there otherwise. And you've been doing this for 4 years. What has the growth rate been like in those 4 years? Because right now you're at number 4, and after today, because everybody should go subscribe to you today if you're not already subscribed to him, and just start to play. But what has the growth rate been like? Has it been like a rocket the last several months? Has it been more steady?
No, it's been
Years?
very steady. It's bursts of high subscriber growth. Like this year in April, I had this massive Intel trade when it was $40 and the stock went to 130 in a month. And people then convert. And then, the market gets soft for a little bit. People blame you for the softness, even though I've told them 100 times they need to step aside and they'll unsubscribe. And so, it's a cat and mouse game, but it's usually like the market up and to the right all the time. And there's a steady flow of, say, 30, 40 free subscribers a day. They convert pretty highly. I mean, I was looking at my stats. It's like I don't know, 15% conversion rate or something, like a pretty high conversion rate.
So is there a recommended kind of onboarding process that you have for new subscribers? Like, do you recommend that they kind of get their feet wet, watch and observe before they start trading with real money? Or do you tell them, look, jump in right away as soon as you're ready? What do you see as like the normal path that someone comes in and starts trading? And assume again, maybe they're not already a professional trader. Like obviously if they're already there and they're already set up, they're going to get going right away. They're just going to start leveraging your intelligence. But if they're new to it, do you have a recommendation that you think like, hey, get your feet wet? Here's the new Noopy room, kind of like.
Look, just being completely honest, if you're not a self-starter, right, you're going to have a hard time because again, most of the people in the Discord know what they're looking at. A lot of them are professionals. I do not. I don't really have a crash course for beginners. I would say this is for more seasoned traders who know what they're looking for and just want information broken down into a simple format,
So
right? Because
basically, basically how I heard that, this is me being straightforward. If you have an advisor that has you in the market and you're doing everything, you're not just doing equities, right? You're doing options trading on commodities on everything. Doesn't
no,
matter.
no, no, just equities. Just
Okay.
I try to keep it simple. I try to keep it simple.
So if you have a model portfolio, 60/40, whatever your equity exposure is, and your advisor is not subscribed, I would pay the $1,000 a year
Right.
and tell my advisor to start going to this Discord tomorrow morning.
Yeah, I mean, look, it's a completely different world. What I tell people to do is have a trading book and then have their long term investments. Okay, I have a book of long term investments, and I rarely ever check it because there's just no need to.
Right.
Those names are fine. There's not really much to worry about. And then with the money you're trading, there shouldn't be rules on it. There shouldn't be. You should be as reckless as you want to be. This should be money that you're okay losing, and you should, take all the shots that you want to take.
Mm-hmm. Right, and just don't take them blindly or stupidly, and don't guess if you don't have to, right? That's
Yeah.
what I'm offering people. Why would you guess if you don't have to?
Well, I mean, I just hate when people want to think of their trading book where they're taking a 3% position. This is your trading book. You should have at most a handful of positions.
How many do you recommend?
Honestly, I'm okay at times going all in, even. If you have, look, again, this goes back to my database. If you go and look at the database and you change the time frame from January 1st to today, you will see that Intel, for instance, has been twice as popular as any other name in the database. Sure enough, Intel is up 200% this year, right? And so that gave me the confidence in April to say, hey, look, you know what, guys? I'm going all in with this risk reversal. And I was on it. I was on it. And that's why, like I said, I have a trade that's so deep in the money and it's so big. I have a 4,000 lot call spread and it's at 60/80 on Intel. So as long as Intel ends the year over 80, I'm going to end the year with a fortune. Okay. But I wasn't even thinking of Intel going to 132 where it was a month ago. This stock was $37 at Christmas. And so when I put on that trade, I was never once thinking how high it would go, but I knew it was going higher because that's one of my beliefs about the market. Okay. A lot of people talk about option flow and they look at one trade here or one trade there. I believe in quantity. And what I mean is I aggregate all these option trades and then I rank them, right? And my rankings show what names are seeing more and more inflow. Okay. And those are the names that you want to be in. Those are the names that you want to shift your focus to because they're seeing multiple huge buys from big players, right? Names that are in downtrends won't be seeing those. Right? If a name's completely breaking down, you won't be seeing call buys on those. You won't.
Mm-hmm. Right. Gotcha. So, Market Stack had a question in the chat. I'm going to reframe it because it leads me to something I was thinking too. So I'm going to blend the two together. You focus on equity markets specifically. That's kind of where you're focused and have been right now.
Right.
Your community is a lot of professionals and people that are kind of looking for an edge and that that have experience doing this. Doesn't mean you can't start fresh and new. It just means that's your community. That's what it's made up of. You're serving an institutional grade audience, but they're also retail investing, probably on their own personal accounts. So do you see, because of your focus on equities and your strength there with your database, do you see people that are on the fixed income bond side coming to you because you're their edge, like you're functioning as their quant that they don't necessarily have? Or do you see mostly people that are already doing equities just coming to you for doing it better, faster?
It's just people who want to be in equities and they've tried the other products out there, right? They've tried, I'm not going to name the other products out there. Everybody knows what they are. And those are, they are way too much information in my book. Okay. They're giving you a billion trades, but there's no depth on what you're seeing. What I do is I give depth to the handful of trades I'm flagging, right? In a week, I might flag 700, 800 trades, but you're going to get complete depth on all of them.
And when you think about this business going forward, how much have you extrapolated out the real value of this platform for you?
I mean, it helps me do my work for one, right? I'm trading my own book. So I'm logging this data either way, right? This database was mine before I ever shared it. I was doing this to help me visualize data beforehand. Now I'm just sharing it with everyone and they're paying for it, but it doesn't harm me in any way to let people access data because again, we're looking at hundreds and hundreds of names in a month. So if I see something I like, it doesn't necessarily mean you might like it, but the ability to give people data that they can sort through on their own time. I mean, I think this
I mean,
business.
here's what I see. This thinking about your business, right? And again, I'm just interested in how you respond to this. You don't have to answer. You're growing a portfolio. You said from 1.4 a couple years ago to 11, and that's after you pulled 3 million off to pay taxes and a bunch of other stuff. Sounds like you're going to be up 60% again. We're not doing any income claims. We're not promoting it. We're not saying anything's going to continue. What we're saying is that's significant. And now you have roughly a 20% conversion rate on free subscribers to paid subscribers. And your paid tier, if they take the discount, is $1,000 a year. So if you just do back of the napkin math, your Substack / Discord community is generating you $2.5 million in free cash flow with relatively low expense. And you're basically trading your own book openly. But that 2.5 million, unless you have some really bad habits, is just adding to your pool of capital to trade your own book. So the flywheel is real. And the database that I hear you logging is priceless because it's human logged and it's AI enhanced. And it's got a rule set that you came up with that is obviously working for you, seems to be working for the others, or they would not continue to subscribe. And so if that holds true at any level of vector going forward, you're someone if I'm an institution, I want to buy, but you're not going to be cheap and you might not want to sell because you don't have to sell because you're basically helping people that you're getting to know do better while you're doing better and you're making millions of dollars a year and your trading account is growing on top of it. Why would I sell out to a corporate institution and for what price? Am I crazy to think that that's what you're looking at, or am I kind of on direction? Well, how do you feel about that?
I am a very lucky person. You're right. I get to
You're
work
a
from
smart
home.
person. What you are. I mean, lucky. I think you're being a little bit modest. Luck is preparation meeting opportunity. You obviously were prepared. You capitalized really well on this opportunity, and Substack's still not even at its peak.
Sure. Look, it's like you said. If I wasn't doing a good job, people wouldn't stick around. That's just one of those things. And furrows in general have a really bad reputation. I'm glad that you won't find anything negative about me anywhere. You won't find anything. There's not much anyone can say because again, I show all my work. You see my trades that I'm in. You see when I cash out, and that's what makes me me. And so I have had offers to sell the
Worst,
Substack, but I have no interest in that.
what's the worst day you've had in 4 years doing this, and why was it tough?
I've lost 7 figures in a day. I use a lot of leverage. Like I told you early on, I have my set of rules, and anytime the market's over the 21 EMA, I am okay pressing leverage. I leverage doesn't scare me. It doesn't. I understand when we're in uptrend and when to push things, but sometimes like Friday came out of nowhere. There was nothing on Friday, and I got rocked on Friday, but it doesn't change the long term direction of what I'm trying to do. But those days will happen. It's not, you can't cry in the casino, right? We went straight up for 2 months. I made a fortune in that time frame, but yeah, a day like Friday caught me off guard. It caught everybody off guard.
So how do you prepare and how do you draw the line as as you kind of do all the necessary, just obviously your community trusts you and they know this, But how do you manage the emotional around that as your audience has grown? Because I mean, people do, whether you say that or not, people put assumptions on you, right? And when you're winning and you have the returns you have, it's easy to hear you say, I lost 7 figures in a day, I got rocked and I wrecked, and you know, but then when it happens to them, they don't necessarily think about it the same way. And you haven't had a lot of negative uh trolling but you've had people unsubscribe. Like, how do you personally just manage the emotions around that? Do you not do you have the ability to just disconnect from it, or do you feel more and more responsible? Does it weigh on you ever? Just curious.
It doesn't weigh on me, but it is irritating because people are so unrealistic. Like I said, we just went up for 2 months straight, every single day, basically. Okay. We've had 4 bad days in a row. And again, I literally will send out warnings. Hey guys, we are under the 21 day. This is not where you want to put on risk. My database has a huge warning flashing over the trades that, hey, we are under the 21 day. Whatever you do here that's on you. And people will still press it, and then they'll get frustrated. And I just try to tell them, look, do you see why these rules are in place? Like, there's times when it's not time to go long everything in the market. And people, you know, they kind of have to get punched in the mouth to understand that. And I have a ton of people in there that say, well, I followed your rule perfectly and I completely got out the other day, and they're happy with it. So it
So
is
when they're getting out, because you're not really a short buyer, right? When they're
no,
getting out, are they just moving into cash? Is that
yeah,
pretty much standard off ramp? You're just going right to cash and waiting?
that is my main premise. Is there's times where you shouldn't be long. Now that doesn't mean short things, because again, I don't like to short things because there's always some nonsensical pump, right? I mean, it's just
Sure.
like you never know where it's coming from. We could have this weekend. We could have a Trump deal with Iran. I would rather just move aside until we're back over the key moving averages and the market is a buy again. That's it.
Yeah, I mean, I think it sounds like you operate from the premise, which I don't think is going to shock anybody, that it's a rigged game. And so if you're going to try and get cute and make money on the up and on the downside, you're probably going to get wrecked because you don't have the weaponry that the people rigging it have. And so what I heard you say, and I'm paraphrasing here, so correct me if I get any of this wrong, but it's kind of an interesting insight that I'm gathering. You've said multiple times, every stock is always a buy at some price. And so that inherently makes me think you're long oriented, meaning you're a buy side trader and cash when I'm not buying. You're also looking at enough data points to know there's something worth buying probably every single day. And so if you're going to move out of cash and you're wondering where the other entry point is, you probably won't have to wait too long. Maybe you have to wait a week, maybe you have to wait 2 weeks. But is that kind of accurate if I'm trying to summarize the last 45 minutes into 45 seconds?
Yeah, look, if you're talking, look at someone like Jim Cramer. He always says there's a bull market somewhere.
Right.
Okay. I'm not even a Jim Cramer fan, but that is true.
Me neither.
There is always a bull market somewhere. So you go back to the war, March, April, you look at the database. It wasn't call buying on AI names. It wasn't call buying on wafer names. It was call buying on oil names. It was call buying on fertilizer names. And so again, with the work I do, you will see what sectors are being rotated to. You will see
Yeah.
it. You will see where the money is rotating, and it's not always tech. Even though for most investors, tech is everything, right? You look at the S&P 500. You look at the top 10 names. It's all tech, right? The top 50% of the S&P is basically all tech. Even throw in Berkshire Hathaway, that's half Apple. So what you're talking about is tech obviously runs the whole market, but there are times where tech isn't what is leading the charge.
Well, and I think what I hear you saying too is, and it all makes sense, right? When you can think about a long form discussion with research, with community, with things like that, that Substack has kind of become, not just in finance, but in anything intentional that I'm searching for, then I can understand why people are shifting their attention to you. Why they're parting with their dollars to you at a different conversion is because it's immediately tactical and practical to kind of get my money back, right? You're not just teaching me stuff, making me read stuff. I'm able to make a quick decision. Am I getting my money back and paying for itself or not? and I'm going to keep subscribing if that's the case. So I see why your conversion rate is working. I think the timing of also what you just said is the rotation is quietly happening in the sense of the mainstream, because CNBC and Bloomberg and all those people, they're not incentivized to tell the masses where the money's already moved. You're providing that signal while the noise is happening on all the other channels, and you're doing it in a very closed room with your own book. And so you obviously deserve the attention and trust that you've worked hard to get so far, in my humble opinion. That seems to be why you're converting. It's just value creation, and you're filling a void.
Well, I mean, that's about it. Uh, like I
So
said,
where do you think we go from here then? So where's the money rotating that isn't being talked about on other Substack channels? Because there's a lot of smart people writing some really smart stuff. I've had several of them on the show. Where do you think people are missing it? What are you telling your audience that no one else is telling them right now about where the rotation is now and where it's going to be in 90 days? What are you seeing? Because everybody right now is focused on SpaceX, right?
nah,
And Anthropic. And everybody knows, okay, that's great. Like retail is going to get smashed. But no one seems to care because they just don't want to miss that train.
90 days is an eternity to me. My time frame is the next 15-minute candle. I do not make calls that far out. What I will say is we are today was the fourth close under the 21 EMA. We are in a downtrend for the moment. When will we be out of the downtrend? When we're back on the other side of that 21 EMA. I don't know when that'll be. Nobody knows when that'll be. Hopefully sooner than later. But I would say if you're buying anything right now, you better be a long-term investor because, and I mean long-term, like 3 months or something. Okay. Because when you're buying down here, you don't know how deep the market can fall. Okay. When you're on the other side of the 21 EMA, you're in that uptrend. You're in a market that's gapping up every day. That's where you want to be long. Down here, you're taking a stab that you're nailing the bottom, but you don't know that. You don't know that. We can go down another 10%. And so what I try to tell people is when we're in an uptrend, push it, go hard. Because when you're in there, that's where you're going up every night. You're waking up every morning. The NASDAQ's up 100 points. It's up 200 points. When you're down here, you see what we're getting every day. We're gapping down every night now. We're just in a position
Does
of
that mean that
weakness.
you put a lot of stop losses on when you're looking at that 21-day EMA? Do you put a lot of stop losses on right out of the gate, or how do you know when to bail?
So typically I would just go to all cash. But at the moment, I have this huge Intel trade that I've been in for like 3 months. Okay. And as I said, when I put the trade on, I just need Intel over 80 by the end of the year. Okay. So because that trade is so deep in the money, I'm not panicking and closing it. But typically, yeah, I would close up everything under there. I wouldn't have any long positions on.
So that was interesting. So you basically put on a level of, as long as it's above 80 by the end of the year, I'm not closing this trade out. It's at whatever you said, 100 and something, 130.
That was the max strike when I put it on. When I put the trade on, that was the max strike. They opened up all those Intel calls after it ripped after their last earnings. And it went up, I think got as high as $132 a share. So they've opened up strikes all the way up to like
The way
$200
way
now.
you look at it is, you're $52 in that example. You're $52 above your profit taking.
Sure.
So you're going to let it ride until you're convinced that the 21-day EMA is downtrending and gapping down to where 80 is not going to last through December 31. If you see that, you'll bang out at whatever the profit is above 80. And if you don't see it, you'll let it ride and just.
So here's the thing. I'm in a call spread on Intel, right? And so the call spread I have maxes out at $20 because you're talking the spread between $60 and $80 because it's a 60-80 call spread. Right now, because of the time decay, right? There's so much time left until that trade expires. That trade is only worth like $13.50 today. Okay. So I have another $6.50 left to gain as long as Intel stays over 80 bucks. And I have 4,000 of those contracts. So that's 400,000 shares. That's like another $3 million almost. Okay. And Intel closed today at 106. So I'm deeply in the money on the trade. I'm not going to close it, even though the market looks weak at the moment. You get what I'm saying? Because there's so much left on that trade, and Intel could fall another 15% and I would still profit.
So when what is the indicator that tells you, that if you don't get out today, that you're going to be that 15% is going to happen tomorrow and you're going to be upside down? Like, what is it? Is it just the same metric? It's just the 21 days.
Look, I'm still looking at the same option flow that I'm seeing. It's still one of the top trending names in my database. I'm not seeing any like bearish activity of
So
someone.
every day you're logging that option flow
Sure,
manually and you're running it back through, right?
sure.
You're running it back through. Okay, gotcha. So that's what you're sharing with yourself. And then you're also sharing it with the audience.
Right.
Some smart people in the audience, are they ever questioning or coming back with some things that you sharpen your thoughts around? Like, in other words, is it a reciprocity type audience where they're going, "Hey, thanks for that. Here's what I'm seeing." Are they running their own algos and sharing that back in there, or what's the value of that community as far as the give and take?
You have so many different people in there. You have people, hooking APIs up to their brokerage and trying to like build a bot that trades for them. You have people swinging zero DTE calls. Like you have every type of trader imaginable in there. So there isn't really a one size fits all rule for what goes on in there. But again, they're all there for the same thing, and it's direction. And so, as I said earlier, the more option flow you see on a name, whether it be call buys, put sales, whatever, you're getting direction on what name is going to work. Okay. That more than anything else is what matters, right? We're trying to be in the right names at the right time. Okay. And what I'll tell you is very rarely will you see a name explode without a ton of put sales, call buying before it makes that move. Okay. Like it'll be of it it doesn't happen often. Okay. It doesn't happen often that you get a move without a ton of options activity beforehand.
Yeah. I mean, I can, when I think about it, and again, for my audience, for his audience, anyone listening to this on replay, I mean, this is unsolicited. Obviously, this is just me talking with a man who's doing some things really interesting and smart on Substack, and that I want to learn from and sharing it with you all. And what I can see is, my goodness, for $1,000, I can't buy an AI subscription that's going to work as hard as you're working, logging these things daily for yourself. I
Sure.
mean, it's like, I get why your conversions are high. Just for context, you may or may not know this. Depending on which model you research and which research you look at, uh, the conversion rate is typically about 3% from free to paid. So, like, Doomberg and Burry and Citrini, who have massive six-figure followings of free, they're averaging somewhere around 5, 6, 7% paid. Um, Anything north of 5% paid subscriber to free subscriber total count is like top 1% of 1% on Substack, regardless of the category. You're closer to 20%. So as your awareness grows, if that holds at all, not only will you be the number one bestseller, but you'll probably stay there for quite some time. But I understand why, because you're not selling information. Like, you're actually providing a data feed that is updated daily to smart people who want to use that data feed and your example for whatever purposes they want to use it for.
Yeah. Look, I can raise prices at any time. I know that, but I don't want to be inaccessible to people. There's some college students who use it. Okay. And at $99, it's still a lot to them. I have the live
You're
tier.
going to be making with 100,000 subscribers, which you have to go 8x from here in free subscribers to get to 100,000 subscribers. But holding your current conversion, you're making 20 million a year, giving it away to people that are making millions of dollars. Like, you don't ever have to raise prices. You certainly could, but
Right.
again, you at your conversion rate, if you had Citrini's reach, when you have, not if you had their reach, or if you had Doomberg's reach, you're making 70 million a year with your current prices on Substack.
I'm, look, I don't
And
know
then
how
you're
many.
and then you're investing it and making whatever. Let's say your IRR drops to 25 and 30 because you finally can't just keep 60 going. Dude, that compound's okay for you,
I
right?
I I I never knew how big the market was for people looking for options data. Okay, so even right now, what you're talking about, 2,000 subscribers, I have no idea where that is on the spectrum of how much more can it grow. Um, I don't know. I don't even think about that
I
stuff.
look
I
at
kind of just
getting, so I looked at an acquisition of a I don't want to call them a competitor, but they're in the space. They sell to the same people.
right.
And they have a great service. And I looked at them and they've done really well. They've built a tremendous community. There was 30,000 people paying for somewhere. It was right around the same number. It was right around $1,000 a year. Maybe it's 900, $800. And it was very focused on trading view, right? Indicators, just an
Right.
overlay. And they were delivering real value to people and their community was growing. And there was 30 some thousand people in that, and they were growing at a lot per month. Like their number one competitor had 80, 90,000 people. So all those people are already in the market. You add those two together, there's 120,000 people that you only have 2,000 of if there's a pure crossover. If you don't have any of their 120,000, that was two people on TradingView with 120,000 people looking for you. So how big could it get? A lot bigger than it is.
No, I had an offer. I had one serious offer to buy it, but I have no desire to sell it.
No,
Look, if
I
I sold
wouldn't.
it, I wouldn't have anything to do with my life. I get up every day. I go in there, I chat with a few hundred of my friends every morning, and I do my work. It helps me trade better, and I spend the afternoon with my
I
kids.
think
What more do I want out of life?
that's an interesting thing. It does help you trade better because whether you are consciously concerned about it or not, there is no way that a human being cannot be a little better when they know 2,500 people are looking at them, right? Like you're trading for yourself, and that's great. But if you were just in your basement doing it, no one knew you were doing it, you'd be making money and you'd probably be doing just as well. But the fact that now you've put yourself out there, you've put your book out there, you've put your results out there, you've talked about your 7-figure loss, you've talked about your upside gains, and now there's other people paying you to do that. You're they're iron sharpening your iron because there's just no way a human being can have that kind of eyeballs on them and not be sharper. You're focused. So yeah, why would you sell? A, you're making more money and you're having fun. Why would you sell that? That's the dream, is to actually wake up, make money doing what I care about doing and that I would do for free. You're doing that. So you've cracked the code on that. I don't think there's a price that you probably would sell for. Not now. You sound a lot younger than I think you are. The only reason I know that is because you said you started in the 90s, right?
I mean, I'm in my 40s. I'm not a spring
Yeah, you're
chicken,
young.
but
You're young. Like what I'm saying is at 40, you're still like at 40, you're still young. Knock on wood, right? You got you're only at halftime. So what are you going to do for 50 years? You're certainly not going to go buy a bunch of material crap.
no, 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 no. Look, I love more than anything else getting the emails from people, getting the DMs, how much money they made, how much better they got at something. They learned a new skill. That's the kind of stuff that makes it worthwhile. Obviously, if they don't do well, they're going to chew you out in email. And I've been really fortunate in my 4 years doing it. I've never had somebody chew me out in email. I've had a few chargebacks here and there, but nobody's really come at me with, "Hey, you cost me a fortune," which is a big thing for a lot of these gurus on Twitter. Is they give out some bad information and people get killed, but fortunately that hasn't happened to me. Even in 2022, the market was rocked. That was my first year there. I think I made 40% that year. So I always happen to be in the right names, and that's why people stick around.
So the question that I'd love to ask and as we wind it up a little bit is just, what's helpful to you right now? What could someone do that brings you value? And then the second piece of that is I want to know who you subscribe to, or if anybody. Doesn't have to be on Substack. It could be wherever. Data sources. It could be anything.
you you know, this is a bad place to say it, but I really don't listen to any podcasts. I don't read books. I don't do anything because I'm so focused during the day on the market that when I'm finished, I just want to unwind and play with the kids, and I don't want to spend time learning a new skill or doing whatever. I do fine. I do fine. I'm not somebody that wants to expand his horizons. I've worked in this
Yeah, that's
business for a long
honest. That's
time.
awesome. I mean, like I said, that the clarity is everything. So what do you like to do when you're blowing it off with the kids? Do you have any hobbies that are like totally random?
Man, we travel a lot. I love playing baseball with the kids. I love playing basketball with the kids. Just everything. I have three little boys, so for me, look, I grew up with a dad who he was a small business owner, and he was an incredible dad. But he was always so busy with work. I mean, he worked 5 a.m. to 6 p.m. and he'd come home and it was nap time and then it was time for me to go to bed. And so I didn't really get to spend a lot of time with him the way I am with my kids. And so for me, time with the kids that's the most important thing to me. So yeah, I wouldn't trade that in the world for anything.
That's awesome, man. That's great. I mean, I had a dad who, he was not what you would call a big earner and didn't need to be, but he was there. We played catch, after
Right.
school. There was not too many days that I remember not playing after school with my father. And a lot of kids don't get that chance. And the fact that that's a priority for you. And again, the markets close at a time where you can do that. And so, with that being said, um, there's a lot of other things would talk to you about, but I think you've given us a lot of value just in insights into what you actually are doing, who you're doing it for. I encourage everybody listening to this to subscribe and go join your community. Obviously, I don't have to worry about them converting because you're doing that better than anybody. But what I will say is just thanking you for the time coming on Atomic Level. I know this is the first and I think maybe ever time you've done a podcast of any kind. We agreed to do it on audio because you are a private guy and I want to respect that. And so for those watching this on video wondering why that's been the case, that's why it's audio only. And I just want to thank you for being here. I want to wish you the best. I look forward to following your trajectory and rooting for you. And I want to let you get back to your kids and have a good rest of your night because it is that time. So thanks for being on the Atomic Level. James Bulltard, everybody. If you're not subscribing to Running with the Bulltards, I think it's one of the coolest names. Also, a Substack ever. So I can see you have a sense of humor on top of it. And thanks again for being here, my friend. It was wonderful.
No, thank you.
Talk to you soon.